Welcome to another episode of Helping Heroes Become Homeowners. I'm your podcast host, Richard Seri with Alliance Mortgage Group. If this is your first time joining us today, we welcome you. If you're a veteran or active duty member and this is your first time joining us, or you're coming back to listen for more information, we welcome you as well. And again, thank you for your service. So with our podcast, we are designed to talk about the VA home loan, all the benefits to use the VA home loan to build wealth through real estate, and to debunk those myths that we always hear out there on why the VA home loan isn't the best loan to use. So we're here to talk more about that, right? So we thank you for joining us today. So there's a lot of topics today that I want to discuss. One of which is some changes to the VA guidelines that have been more clarified for underwriting to help get more loans through a manual underwrite process. One of which is the medical collections. The medical collections and the medical charge-offs in the past had to be calculated with a payment, and that payment got figured into your residual income. It got figured into your debt ratio and the credit worthiness of the overall file. That has been changed. That is no longer the case when that file gets underwritten. The underwriter still has to include, however, the non-medical collections, your regular collection accounts. So we have to take 5% of that balance to get a payment, and that payment is then calculated into your residual income, into your debt ratios, and your overall credit worthiness to show the ability to repay. As suggested on all manual underwrites, you want to always have a really good explanation letter of what caused that derogatory event, and to show the underwriter that event has come and gone. So that's a good thing for veterans out there wanting to get approved. If you've gone through that process before, and that might have been something that held you up, I strongly recommend that you reapply. Either try us or your existing lender that you tried before, and work that through and see if you get an approval on your loan. Now, your VA loan limits, your county loan limits have been increased starting a couple of days ago. Those have been announced. Your new county loan limit is $766,550. This is also true to the conforming loan limit, so those have been increased as well. Those, again, have gone into effect. The lender will just service that loan until after the first, when they actually technically go into effect. But you can start qualifying for that loan amount right now. Now, as a veteran, you really don't have a max loan limit if you haven't ever used your entitlement before. So if you've never bought a home using your entitlement, your VA home loan entitlement, then you can do whatever loan amount that the lender can do that they will qualify you with, or what loan limit the lender has in place for the VA home loan. There's not a restriction on that. However, if you've used your VA entitlement in the past and you haven't restored it, but you still have some bonus entitlement remaining, you will be held to that county loan limit, where you may have to put some money down, or you may not have to put anything down now that loan limit's been increased. So that's a good thing. FHA loans, if you have to fall back to an FHA loan, those loan limits have been increased as well. They're now $498, $257. Now, you do have to wait until January 1st, however, for that particular loan, because there's a case number assigned to the file, assigned to the property. So you really can't start that process until after the first of the year. Now, we do have a few things program-wise. So programs are always being, redone. New products come into the marketplace to help first-time home buyers. One I want to talk about, though, is the 1.0 rate buy-down. This is really the most popular rate buy-down program that people are using because, one, it's the least expensive that the seller has to contribute. Two, the lender can also contribute towards the cost needed for the savings. So it helps at least get the rate down 1% below the note rate for the first 12 months. So you're going to have some savings immediately. What we have as well is can include the appraisal. The appraisal cost will be credited up to $600 at closing. So if you use both those products together for FHA, VA, or conventional, you're going to get the appraisal credited up to $600 at closing. So that's really a good thing. So that we've been talking a lot about all the rate programs and all the rate buy down programs for the last 6 to 8 months. And at the end of the day, the 1.0 buy down is the most popular, but you can still do the other programs that are available. You just don't get that $600 credit at close. Now, Freddie has a new program. It's really not new. It's been expanded, so to speak. It's called the Special purpose credit program. And what this program will do is it'll give you up to a $6,000 grant to go towards closing costs, of which $500 of that 6K will go towards the home warranty and $500 of that will go towards the appraisal. Those two last items will just be a credit on your closing disclosure, but the total amount is up to $6,000. So the question is, how do I qualify for that? So what Freddie did is they have what's called a kind of like a map, and in each city has an area map. And if you live in that area, but you're not buying in that area, but if you live in that area, you reside in that area, you could qualify for this program. It's a conventional only program. It's a first-time home buyer only program. So a first-time home buyer is someone defined as not owning a property in the last 3 years. So if you owned a property 37 months ago, you would then be classified as a first-time home buyer. But you have to be a first-time home buyer on that. So if you want to check out this program, you have to contact your lender. Give me a call, shoot me an email with your address where you reside now, and we'll see if you qualify for that grant program, and we can work on getting you pre-qualified for that. It's something that takes literally a few minutes to do. Now, there is no income cap on that too, that I forgot to mention. There's other programs that you have to have you can't exceed a certain amount of income. This program does not have a cap. So if you make $200,000 a year and you live in this particular area that qualifies for the grant, and you're going to purchase, in another city, you qualify for the program. You just have to be a first-time home buyer. And what's really cool about the program too is if you can use this for a 2 to 4 unit property. You just have to live in one of the properties as your primary residence. So you can take advantage of the program. You can have a grant up to $6,000. You can buy a 2 to 4 unit property, live in one of the properties as your primary residence, and you rent out the other properties, and you can build some cash flow with the program. That's really neat. So again, contact me. I'll work up some numbers, see if you qualify for the program, and get you guys moving along on that. Again, this is only for conventional financing. So a lot of questions that I get from realtors, I get from clients, I get from friends, just in general discussions. Should you buy a property right now? Is now the time to buy? And in my opinion, it's always a good time to purchase a home. If you know the payment's going to be in your budget, you've got everything in order, that you should go out and look at a home, look for properties. Make sure you're qualified first, but you want to look at properties in your budget. There's a lot of homes right now that are on the market that have been on the market for a while. We are in the season where homes are just sitting for a little bit, sitting longer than usual. Sellers want to sell. We've got buyers out there. This is a really good opportunity as rates have been decreasing, and you've got these buy down programs, and you've got all these special programs that are available to the client. There's deals to be had out there. So what I recommend that you do is take advantage of the opportunity that's at hand. You've got some homes out there that have been sitting for a while. Rates, again, have been improving, because when rates are going to improve, but what's going to happen is when rates really start to improve, you're going to get more buyers coming back into the market. We still have an inventory problem. What you're going to run into, if you want to consider waiting still, is you're going to have multiple offers. And when you have multiple offers, the price of those homes increase. Even though rates are a little bit lower, you're paying more for the house. So it's what I recommend, if you're in your budget, like I said earlier, go out and start looking for a home, because you can always refinance the property when rates do improve. So in my opinion, it's always a good time to purchase. Well, again, my name is Richard Sari with Alliance Mortgage Group. You can always contact me via email or on my web address, which is alliancemtggroup.net. Be sure to check out the link description to subscribe to our podcast. You'll get notifications of when a podcast gets released. And as always, you can always reach me on my main number, 214-872-2188. Be sure to comment on our website and our podcast if you have any questions moving forward. And we're going to catch you on the next one. Thanks again for listening to our podcast, and we'll talk to you soon. If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.